broadly the last few days, it's staples and banks which have been outperforming. Mahima and Hersh joined in to tell us what is driving or what are the factors behind this rally in the sectors respectively. Well, usually I'll go to Mahima first because ladies first, but Hersh, let's make an exception today. Banks are really ruling the roost except for today. So I'll come to you first.
Well, yes. Thank you for that, Neeraj. First off, you're seeing an easing regulatory environment, at least over the last 2 to 3 months since the new governor has taken charge. You're seeing the RBI take proactive steps to try and ease the regulatory burden, which is already or which was difficult for lenders in general, at least over the last year or so. The second piece is obviously on liquidity. As part of the same breath, liquidity has eased substantially. Now you have better visibility even on an asset quality. You know, there are visible signs that asset quality likely is improving, is getting better in the few pockets where there have been concerns. One is microfinance, the other one is unsecured lending. The third one is obviously valuations have been reasonable for some time now. But with some of these headwinds receding, the valuation suddenly looking really good because the headwinds are coming off. And that's what's really standing out as well. The fourth piece is growth likely to pick up. Better liquidity conditions. Also, you are expected to see new draft norms of LCR actually benefit some of the lenders, and therefore you might likely see more upside to credit growth over the next year or so. That was all that came through yesterday. And the fifth piece is FII buying. That's happened for 5 sessions on the trot for the first time since September of 2024. So after a 6-month span, we've seen FIIs come back and buy, which is obviously positive for lenders because that is the largest go-to place for FIIs, and it has been under-owned for a while now. So just a combination of all of those factors playing out.
Okay, let's go across to Mahima though to talk about what's driving FMCG stocks.
So, the first point being, of course, valuations have corrected significantly since October. About 35% has been the correction in terms of the major FMCG staples. Now, because valuations are being attractive, there are fund flows being seen in FMCG counters. Plus, we're also observing that now FY26 outlook looks positive, which is why brokerages are also turning positive in terms of the FMCG staples. Second is tax cuts we've seen will see its benefit from first quarter of FY26. The approximate tax benefit in the hands of an honest taxpayer will be around 8,000 rupees, which is around 5%, and that will aid demand, especially in the urban areas for these consumer staple companies, which has remained weak so far. The third is lower interest rate because of the repo rate cut by the RBI will also lead to an overall boost in consumer spending. So there will be a recovery in terms of urban demand as well as rural recovery, which has been the case in the past few quarters. We'll also see an up move. The fourth point is that investors are shifting focus towards defensive plays like FMCG. We've seen uncertainty in markets because of Trump tariff and a lot of global economic uncertainty is also playing its part, which is why investors are now turning to something more defensive, and FMCG is the best way to play that. And lastly, like I mentioned earlier also, FY26, a lot of brokerages are turning positive in terms of the outlook for these FMCG companies because now raw material prices are kind of easing out. Inflation has played its part, but price hikes will now be matching the kind of inflation hikes that have been taken in the past, which is why margins will also see a slight uptick from Q1 going ahead. That is why these are the 5 reasons as to why Nifty FMCG is seeing good gains.